Welcome to the HyperFast Agent Growth Show. Get real strategies, real results, and real estate them differently. Lead generation, team building, AI, and more from billion-dollar agents, best-selling authors, international speakers, and real estate coaches, Kerry Shull and Lesniak. Let's dive in!
Welcome to this edition of the HyperFast Agent Growth Show. I'm your host, Lesniak. Happy to be here to talk about 4 different ways for real estate agents to make additional income. We talk a lot on this show, Carrie and I do, and the guests we bring on about how to sell more homes, how to build a team if that's what you want to do, how to run a more profitable sales business. At the end of the day, though, that income is entirely dependent on your effort, right? Now, I know you can build a team maybe, and so you can shift that around, but when you do that, you're really shifting your time on sales to time on sales plus managing the team. So the things we're going to talk about today are designed to help you earn income without selling homes, right? Because, for some of us or for all of us, right? Some of us sooner than others, that day will come, right? The day will come when you sell your last home or you want to take a break, or go on a vacation with the kids or spend time with a loved one who's near the end of life. There's all different scenarios that come up. And you need to invest some of your time in figuring out how to earn income outside of your sales, how to earn income that uh, doesn't take your time or a lot of your time. So we're gonna give you 4 ways to do that. The first one, the first one is investing in real estate. As agents, we have access to a lot of things that give us advantages as investors, right? We have access to deals. We have access to information. We have access to systems and processes and familiarity with things that a lot of people don't know because we're doing it a lot more. There's a couple different ways that you can earn income through real estate investing. There's short term and long term. I'll kind of group it in those 2 categories. So short term, if you find a great deal, you've got a couple of options. You can get the deal under contract and flip the contract, right? So if you're able to find a deal that you can get under contract for 200, but it's maybe worth 240 or 250 to investor, you can flip that contract and make some of the difference, right? So you can flip it. You're never in. It doesn't take, your doesn't take capital or other people's capital. And you get what's called a wholesaling fee, right? Maybe it's $10,000, $20,000 on average. I've seen people get multiple 6-figure wholesale deals even, right? So that's great, right? Obviously, the advantages are it's quick, it's fast, and there's no risk or capital required. Disadvantage is it obviously is going to be the higher tax rate because it's short term. Now, you can also take that a step further. For short-term income, another one in that category would be a flip, right? These can range anywhere. So you find a good deal, get under contract, close on it, and you do some light renovations, cosmetic renovations, all right, on one end of the scale. The other end, you're adding square footage or even redeveloping. Um, those take longer, have more risk, um, but obviously have a lot more upside, right? Um, the other category would be long-term investments, right? These are typically some sort of buy and hold. They're going to bring you 3 different ways, at least 3 different ways to make income. So there's going to be some cash flow, right? Whether you're doing short-term rental or long-term rentals, you will get monthly cash flow if you buy it right and structure the deal right. You will also get a huge tax saving, right? With the new Trump bill, bonus depreciation is back. What that means is instead of taking the normal depreciation, which is, dividing the improved value by like 27 and a half years in most cases, and taking that much each year, well, now you can do what's called the cost segregation study. So someone comes out and they put things into categories. So some items might be 1 year depreciation, some might be 5, some might be 10 or 15, and some are longer than that. And basically, with this new bill, everything that's 15 years and under, you can depreciate in year 1. Now, the math on this works out to be typically about 20 to 30% of the purchase price. It depends on how old the building is, the actual building itself, the improved value versus the value of the land. So, those numbers will vary. In general, though, it's typically 20 to 30% of the purchase price. For most of you and your price points and markets, that's going to be a six-figure tax deduction. So it's, easily going to save you 30, $40,000 year one in taxes, maybe more depending on the purchase price. Now, at some point, you might have to pay taxes on that, right? You're deferring it. So if you sell it, you'll recapture that. But you can reinvest in a 1031 or do other tax strategies to mitigate it at the time, or even pass it on to your heirs and then they get to inherit it at the stepped up basis, right? So in that case, you've pretty much eliminated that tax. Um, so we've got our cash flow, right? We've got our tax savings. Third way is appreciation, right? Over time, that property value will go up. That has been historically the case. Although, there's short-term cycles and sometimes on a shorter time period, that doesn't happen or it even goes down. But in the long run, prices have gone up, and I believe that trend is going to continue. We probably haven't talked about that enough on this podcast. I think in the last few years, there's been some doom and gloom, and transaction counts have gone down. And last year we saw discounts on listing prices at a higher rate than we have in a while. But if you look at the long-term factors, right, we've got an aging population. We're building less houses per year by the millions than we actually need to meet demand. And we have a government, economic society that is primed for inflation, right? I think the biggest thing driving this is the national debt. We're at a level that the interest alone on the debt is more each year than the defense budget. So it's a huge chunk in the trillions. And, you know, long term, there's not much the government can do, right? Look at their options. They can raise taxes. That's not popular. They can cut spending. That's not popular. They can default on the debt. That would be disastrous. So they've got this hidden fourth, not so hidden really anymore, but fourth way of dealing with it, and it's called inflation, right? Inflation, when you have inflation, it devalues the debt. And unfortunately, it's very painful for consumers because hard asset prices go up. You're certainly seeing this over the years in real estate. You're certainly seeing it in gold and silver, and I think this trend is going to continue. So if you're a real estate agent, you come across good deals, you can lock it up on terms that give you cash flow. Long term, you're going to see even more money made in the appreciation of that asset, and it's a protection against inflation. All right, the second way for real estate agents to make money outside of their sales is through getting ancillary income. When you do a real estate deal, think of all the revenue that is created for other vendors. You've got your title company, your mortgage company, property insurance, inspectors, the whole gamut. There are a ton of legal and compliant and ethical ways to benefit from that revenue that you drive, right? There's all sorts of things from joint ventures to getting your mortgage license to having marketing agreements. And as long as you do it legally, as long as you disclose it to your clients, it's perfectly ethical and fine to do. And it can add anywhere from 50 to 100 basis points of extra income on every deal that you or your team or the people that you're in business with drive. And for many of you, if your average commission, we'll just say it's 2.5, and even if you're adding 50 basis points to each deal on average through these ancillary relationships, mortgage, title, insurance, right? 50 basis points on a 2.5 commission. Well, that's a 20% increase, right? So if your GCI, was around 300, boom, you've added $60,000 if you do this correctly. If you guys have more questions on specifically how to do this, again, this is a shorter episode. We could do a whole episode probably on this, but if you have more questions on it, DM me, text me 703-638-4393, or leave a comment. Because if you're a real estate agent doing again 300K GCI and you drive an extra 60 grand, that's a down payment on a property. That alone could help you buy another investment property each and every year. So if you're not doing ancillary incomes, look into it and start building those relationships. The other thing about it too is, when you have that kind of partnership with a vendor, with a service provider that your client needs, it actually gives you more control over the process. Because if you have an issue with a lender or title company or another vendor, uh, they're going to pay more attention to you if you have one of those relationships set up. So if something goes wrong, you're actually going to have more power to fix it. All right, the third way for real estate agents to drive extra income is through something called infopreneurship, right? So it's a blend of information and entrepreneurship. And it's basically selling, monetizing the the processes, the knowledge that you have built. So if you're a successful real estate agent, there are people out there that could benefit from that knowledge, right? Whether you're a solo agent that is doing, 3, 4, 5 deals a month, that's valuable, right? If you're building a team, that's valuable to people that want to build teams. If you had a fast start in the industry or have learned how to build in multiple markets, that's valuable to people starting out, right? There's different ways to monetize that, right? Now it will be easier if you spend some time on social media, producing, not consuming, again, producing, not consuming, and you build your brand up, right? So you can become known as someone that is an expert in whatever area you want to help people in. And then, once you've done that and you've built a following and and built a brand around that, right? There's so many different ways to monetize that information. You can make guides, you can make books, you can build courses, you can build a mastermind, you can do one-on-one coaching. And I've seen, solo agents who don't have teams, don't have a lot of people working for them, implement simple systems in the area of entrepreneurship and add 5 figures, 6 figures of net income, right? So this is again, if you have skills and if you're successful, there are people that can get value out of that. People that would be willing to pay for that knowledge or that coaching or that access. All right, our fourth way, and this is my favorite one, our fourth way to earn extra income as a real estate agent, and this is one I don't talk a lot about on this show. It is through revenue share, right? So if you're at a brokerage that is the legacy model, this probably doesn't apply to you, but we've seen a wave of agents migrating over to this cloud brokerage revenue share model. And before I dive into it, let me tell you this. If you're a successful agent, if you're having any sort of success, whether it's as a team leader, solo agent, new agent that came on and did more deals than the average new agent, guess what? Your broker is using that. Your broker is using that success to go out, recruit other agents, and build their brokerage. All right. So no matter what type of brokerage you're at, your broker's using your success to grow their brokerage. The difference between revenue share brokerages and the ones that are still in the old model is that at the revenue share brokerage, the success that you have that attracts agents to that brokerage is something that the growth of the brokerage in that the extra revenue that comes in, the broker shares it back with you. So take EXP for example, last 3 years, each and every year they have given back over 200 million in cash and then another 30, 40 million in stock awards to the agents that have helped grow the company, help the company succeed. Um, and the way most revenue share models work is, when agents join the brokerage, they can name a sponsor. If they name you as the sponsor, the broker takes a certain percentage of the money that comes in, the cap money, right? So that agent will pay their brokerage their normal splits, fees, and caps, and some of that is shared back with you. And usually in the revenue share model, it's multiple levels, right? So if you bring on agents, they're on your first level. If those agents bring on agents, they're on your second level, so on and so forth. And at eXp Realty, they actually do this. It's the best model in the industry, the one that created the category. In fact, they share up to 7 levels, right? So your revenue share goes 7 levels deep. Um, and just take my numbers for example. Carrie and I have been at the company for a little over 3 years now. Collectively together, we have sponsored around 100 agents or so. I don't have the exact numbers with me now, but our groups now total over 800. So EXP really is sharing the revenue of 800 different agents with us. For us, that translates into about $20,000 a month in extra revenue, extra cash for us. The cool thing about revenue share is it's different from running a team. It's different from running a brokerage, right? You don't have liability associated with it. You don't have overhead. If you want to expand into a new geographical area, guess what? EXP is already there. Well, you just sponsor an agent in that area. You don't have to go open up a new brokerage there, get licensed in that state. So, now we're in over 21 states. Um, that's one of the things I love about it, right? It's borderless. It doesn't come with liability. It doesn't come with huge overhead. So, your the margins on it are extremely high, and it provides another opportunity. So the last thing I talked about was infopreneurship and using your knowledge to help other agents get a benefit. Well, with the revenue share model, now you're incentivized to collaborate, provide training, provide mentoring, provide support to the agents in your revenue share group, which is what we do. So like we hold masterminds, weekly trainings for everybody that joins us at eXp Realty, whether they're on our first level or seventh level or beyond. So it provides this whole ecosystem of training and collaboration and mentorship and support that you don't just find, at the, traditional old model brokerage. So there's just so many amazing things about it, and then it grows and it duplicates, right? So, once you get to a certain size, you've got multiple people that are, helping to grow your group because it helps them, and then they become business partners. So, this truly, I think, is one of the best opportunities for real estate. I mean, agents, just take what we've done in 3 years, like 20K a month, that's 240 a year. If I were to go out and invest that in the S&P 500, um, or cash flowing real estate, it would take me $5 million of savings to do that. And we've done that in less than 3 years. It's still growing. Um, we'll grow for years. We'll be there for years after our last sale. So it truly is, I think, of these four things I've mentioned, and you should do them all, by the way. But of the four things I have mentioned, this one is there's just nothing like it. Sometimes a loss of words of describing it, right? Because it grows beyond your efforts, right? It duplicates, no liability, no overhead, no risk. EXP takes on all of the brokerage duties and support and training. So you can grow way beyond what you could as a team or a brokerage, and you still have time to pour into the agents that come, and you can really focus on the strategy and the mentorship and the things that will move the needle for them financially. So, you know, uh, outside of just generating you predictable, growing cash flow each and every month, it gives you an opportunity to impact so many more people. So those are the four things that I think all real estate agents should do in their business. So you're not just making income selling homes, right? Add these four income streams. Um, And if you have questions, by the way, on how to do this at EXP Really, Carrie and I would love to talk to you and kind of run through the numbers and show you all the benefits you get by naming us as your sponsor or joining one of the agents in our group. And we truly would be honored of the privilege, and it is a privilege of becoming your partners in helping you sell more homes and build your own revenue share and build multiple streams of income. All right, so thank you for tuning in today. As always, we will see you next time. And if you are new here, don't forget to subscribe, tap the 5-star on Apple, leave us a comment on Google or on YouTube, and share this episode with other agents that would benefit. See you guys later.
You've been listening to HyperFast Agent Growth Show with Carrie Shull and Dan Lesniak. Real strategies, real results, real estate done differently. If you love this episode, tap subscribe and share with another agent who's ready to grow.